Let's dive into your favorite part of the day. We've got some multiple choice questions here on internal controls, IT, the design of those, the testing, and any deficiencies within those controls. First off, what do we see? Well, we see a company employs 3 accounts payable clerks and 1 treasurer. Their responsibilities are as follows. Now, we'll read that in a second, but let's read the question first. Which of the following would indicate a weakness in the company's internal control? Awesome. Great. Well, one of these is going to be an issue. And let's first look through the employee and decide, are they responsible for something having to do with authorization, something to do with record keeping, or something to do with custody? Well, first off, we see clerk one. This person is going to review vendor invoices for proper signature approval. Clerk two enters vendor invoices into the accounting system and verifies payment terms. 3 posts entered vendor invoices to the accounts payable ledger for payment and mails checks. And lastly, we have the treasurer who reviews the vendor invoices and signs each check. All right, interesting point here. So, first, it's important. Now, it's not within each department that you particularly need to separate out authorization, record keeping, and custody. Generally, that would be ideal. So, generally, that would be ideal, right? If everyone in the AP department just had one responsibility. However, that's not really practical all the time. And as long as each individual person only has just record keeping, authorization, or custody practices, that would be sufficient. That's what we're looking for here. So let's just run through and see each of these possible choices. Well, clerk 3 mails the checks and remittances after they have been signed. Okay, that could be problematic. Let's talk about that for a second. Well, the responsibilities there. This is going to be both. We have custody and record keeping. So that's definitely concerning. Posts entered vendor invoices. So this is record keeping, and mails checks. That's custody. So I would say that's very much concerning. But reading along further, clerk 1 opens all the incoming mail. Well, in this case, clerk 1 is just reviewing invoices for proper signature approval. That's not really record keeping, authorization, or custody. So by nature of them just opening the mail, that is custody. That's adding a level of responsibility upon this person, and they didn't really have one of those 3 to begin with. Now, so we'll cross that off. Next one, clerk 2 reconciles the AP ledger with the general ledger monthly. This is obviously reconciliation. This is record keeping, dealing with that. So what are we going to see here? Enters vendor invoices into the accounting system and verifies payment terms. So since clerk 2 is already doing record keeping, and this additional item here is record keeping, that's not an issue, which would not indicate a weakness. Now, lastly here, the treasurer uses a stamp for signing checks. Now, here's an interesting one. I actually had a candidate I was working with through tutoring who brought his actual practical expertise from working in the industry and said this would be, a weakness. And I understand that. I'm here to explain that to you and the purpose of all these questions. Now, for the purposes of the test, this would not be an issue. So we cross it off because we're really looking for the authorization, record keeping, custody. However, if we think about what's going on here, if the treasurer, instead of physically signing their name every time on a check, they just use a stamp that has their name on it. They just dip it in ink and they stamp the check. Well, someone could just steal that stamp and then authorize checks themselves. So yes, you see how that is a weakness. However, this is per the AICPA. Per the AICPA for the exam here, what are we concerned with? We are concerned with the differences between authorization, record keeping, and custody. Awesome. Love to bring that practical real world insight into every question we can. Let us move along and continue having a good time. Now, in an entity under audit, employees have the opportunity to change their time worked after their time cards have been approved. This is an example of which of the following types of deficiency. So first off, yeah, this is definitely a concern because employees have the opportunity to change their time work. So the time card gets approved. You say you worked 10 hours, and it gets stamped by someone with authority to do so. And then you can go in and say, oh, no, I actually worked 15 hours, and it doesn't say anything here about the fact that it has to get reapproved. So we see that someone could go in and just edit how much time they worked, and then they'll get paid more. So we know it's a deficiency. We know this is an issue. It's a problem. Now, what is this deficiency related to? We've got procedural. So this is just in motion, right? Procedure in the process, in the procedures that are carried out. Is there an issue there? Now, this, I wouldn't say it's a well-functioning control that is being carried out improperly. I'd say this is much more a problem with the overall design of the control. Thinking about it, this is more if a control is properly designed, but then the people in charge of it don't actually do it properly, that would be procedural. So I would say we're crossing that off. Design looks good. Is this related to accounting? That's not really a particular deficiency. I'd say it's much more procedural operating design. We're going to cross that off. And then lastly, operating. No, this is for sure within design. For example, what should happen here when employee time cards are approved by the timekeeping function? They should be forwarded to the payroll function, which there then records are stored and no modifications can be made. Employee access to time cards after their approval is definitely an opportunity for fraud. Next up, the company being audited has an internal auditor that is both competent and objective. Awesome. Good for them. Wouldn't it be great if all of us were competent? The independent auditor wants to assign tasks for the internal auditor to perform. Okay, we've seen this situation before. Now, first off, yeah, we definitely this is great. Like we want them to be competent and objective. That's definitely awesome. Now, under these circumstances, the independent auditor may do what? Because if they weren't competent and objective, we wouldn't give them work to do. Now, what the independent auditor cannot give the internal auditor are really critical functions of the audit. You can use these individuals to help you with the audit. Obviously, they know the systems well and they can be a great asset. However, you're not going to give them any work that is subjective in nature, uses a lot of estimates. You're the one doing the job. You're the one who needs to come up with these difficult choices. Let's read through the possibilities. Let's talk about it as well. Allow the internal auditor to perform analytical procedures, but not be involved with any tests of details. I like this. I like this a lot. Well, I mean, in terms of what the auditor may allow them to do, first off, can the independent auditor allow the internal auditor to perform analytical procedures but not be involved with any tests of details? Well, the auditor can request direct assistance from the internal auditor when doing the audit. So this is allowed. It's just what particular actions can we actually allow them to do? Well, the internal auditor can only do anything if the competence and objectivity have been assessed, if the auditor supervises, reviews, and evaluates and tests the work performed by the internal auditor to make sure it's appropriate. And then, like we said, lastly, as well, making sure it's nothing absolutely critical to the audit. However, I would say analytical procedures, which then you need to interpret yourself, those are items that should be taken upon by the independent auditor. So we're going to cross that one off there. This is going to be something that the independent auditor needs to do, and you cannot give that work to the internal. Next up, allow the internal auditor to perform tests of internal controls. Now, this one, okay, this does not really have levels of subjectivity. It's also something the internal auditor would be more familiar with. They would already be familiar with internal controls. By performing analytical procedures, it's kind of, you may be getting into that materiality threshold, having to discuss that with them. You're not really going to want to do that. You're going to want to keep that under wraps and secret. So letter B is looking pretty solid as a choice. But letter C, allow the internal auditor to audit a major subsidiary. No, you're not letting them fully audit anything, especially a major subsidiary. Right? They're not allowed to just go in and audit things. They're allowed to do subsets, just extra functions and tasks in order to help you. Lastly, not assign any tasks to the internal auditor because of the internal auditor's lack of independence. This is not a concern because the internal auditor is never going to be fully independent. They work for the client, and the client signs their paychecks, so they're never going to be fully independent, and that's why they can help you out. You obviously have to review their work and among other things, but that's going to be something that we're just never going to consider because we know that they will never be fully independent. They could be objective as much as they want, and we could see that they're pretty objective. However, they're never going to be fully independent, so we're not going to consider that. Final answer here is going to be letter B, allow the internal auditor to perform tests of internal control. Next up, an auditor is evaluating a client's internal controls. Which of the following situations would be the most difficult internal control issue for an auditor to detect? Before even reading the possibilities, generally that's going to be fraud. It's not going to be a simple error because fraud, someone takes some actions, if they're doing the fraud properly, to conceal it. And when it comes to this situation, if there's just an error, you may find it by testing because no one's trying to conceal it. However, if there's deliberate fraud that's being concealed by someone, and that itself is going to be an extra challenge. So that's just an initial thought before reading into these questions. Now, first, someone erroneously disables edit checks in a software program designed to identify control exceptions, essentially saying that someone in this program disables any checks that are going to ensure that the data is accurate. Now, you could test and find that. So, I'm not going to cross off anything as we go through, but I'm going to say that's probably not as big of a deal. It's probably going to be more to do with something fraudulent. The technology department writes a program that does not properly implement the control due to a lack of understanding. Again, something that you could probably find just from normal testing. The accounting staff neglects the control due to increased transactions to be processed. This is just something that's ignored because there's too much work going on. And then lastly, two employees who work in different departments are circumventing an internal control. Ding, ding, ding. We have found this if you are remembering correctly, and as you should be. This is collusion. This is going to be pretty difficult to find as compared to all of these errors. Collusion is the best way to commit fraud. It's the best way to conceal it. It's the most effective way to circumvent that internal control. Really the only effective way to do it, to circumvent those segregation of duties as well. As such, it's going to be the most difficult for an auditor to detect and for a company to prevent, because no matter what you can do, it's just these people are going to work against you. One way to fight this is actually you can require vacations for key employees at varying times. So that you restrict access to their computers. They can't log in. They can't do any work. And if the two people are colluding, well, one person's forced away. And then once that person is away, if you go in and you see different items happening, you see changes. Oh, wow. The cash balance is a lot higher when Joe has been sent on vacation. Yeah, maybe you could analyze that and find out that Joe has been stealing a lot of money. So that's just something to take into account. Next up, as a part of a fraud audit, a CPA wishes to identify employees with invalid social security numbers in the client's payroll transaction data. That's a pretty good task. Sounds good. Very helpful. Which of the following audit tests of controls using computer assisted audit techniques would best meet the objective? All right, so we got to think about these logically, and if any of these would just be irrelevant. So, for example, I mean, if we're comparing a number to itself, that's not going to do anything. But if we get a separate listing of data to compare to, that's pretty great. Like, for example, if I am looking in the QuickBooks system for a company and I get their revenue amount, and then I compare that revenue amount to their financial statements that were generated, that's not going to really do anything for me because guess what? That's comparing the same numbers to itself. Where did the financial statements come from? They likely came from their QuickBooks system, and that would be just checking data against itself. What would be a way to do this properly? Well, they say they have a $10,000 cash balance. Let's look at in the actual bank statement, see what the bank actually says they have. I mean, that's for cash. For revenue, there's other ways to do that. We can look at their contracts. You want the third party corroboration. Moving along here, comparing the payroll transaction file to the employee master file to extract payments to employees who are not in the employee master file. I don't really like this because the payroll transaction file, this is something that the client can edit and has control over. And the employee master file, again, so it's kind of like just comparing two sets of data that are controlled by the client. And that's not really going to help us because if they are fraudulently committing errors and if they are trying to hide anything, they're going to edit both files and you're not going to find the data you need. Next, randomly selecting 25 payments from the payroll report and comparing the results to employee social security cards in the human resources records. This is a little bit better. However, someone could probably make a fraudulent social security card, and it's not your job as the auditor to be able to determine if a social security card is fraudulent or not. It's not your expertise. So better, but not. It's marginally better. It's not really going to do anything for you. Comparing social security numbers paid in the transaction file to a file of government authorized social security numbers. I like this one because we're comparing a client file to something they have no control over, which is a listing of government authorized social security numbers. We're not comparing client data to client data. We're now comparing client data to a third-party source. And a listing of government authorized social security numbers is probably going to be pretty accurate and pretty reliable. So let's leave that on the table. And lastly, obtaining statistics on the population of the payroll file to identify unusual pay amounts to employees. I mean, this is a great thing that you should do if you're auditing payroll to look for possible errors in payments. However, this isn't going to do anything to identify invalid social security numbers. So this is a great audit item, action, procedure you should take, but it's not going to help you with exactly what we're looking for in this question. Final answer here is going to be letter C. Moving along now, we see which of the following constitutes a potential risk associated with the use of IT in entities' internal control structure. Awesome. What is going to be a problem? I would say compared to not using IT, but guess what? Everyone uses IT today. I don't really see any companies not using computers. So, what is a negative to that? Whereas some of these may be positives, some of these may be unrelated. Let's dive in. Unauthorized changes to systems, that's a downside. If you have a bunch of automated computer generated controls and then all of a sudden someone can change that system and change authorization in there, that's definitely a risk. So let's keep that on the table as well. A reduction in the ability to monitor the entity's activities. This would be a benefit, not a risk. This would be something beneficial that IT gives you. You can actually now monitor the entity's activities much more effectively because you've got computerized systems as compared to just manual processes with humans. The facilitation of additional analyses, same thing. You can just do more analytics with that. You've got more data. And then a reduction in the circumvention of controls. That's not really going to be a risk. That's not going to really be positive either. It's not going to help us particularly reduce the circumvention of controls, but also this is a benefit. So it wouldn't be a risk. Different ways to look at possible answers and eliminate them. Like regardless of if this is related to IT or not, this is something that's good, whereas this is something that's bad. And by that logic, we can select A. When an engagement team confronts a difficulty in their audit due to lack of understanding of a certain component of IT, the team should resort to which option? What should they do if they are dealing with IT? Now, obviously, it's a very developing, complicated, and broad area. IT is not something that your classic accountant may be the best at. So, what are we going to do in this case if we encounter some difficulties? Are we going to trust management's word? That is a big no-no for anything here in our audit. We have to, we're not going to immediately possibly doubt them, but we're going to take what they say and then independently verify it. We're not going to ever just fully trust whatever they say. Crossing that off. Pursuing an independent IT specialist. I like that. If you don't know something, well, as an auditor, you should go find someone who is independent but is much more knowledgeable in the area. So I like that. We'll keep that there. Abandoning the testing area. You're not going to just give up because you don't know something. I mean, you would withdraw from an engagement if you are not able to complete the engagement properly, but that's a whole different scenario. This is not something we're not going to just give up and just because there may be some issues in this IT area and then you don't detect them and then there is a material misstatement. Lastly, assume fraudulent activity. I'm going to say no. We're not going to immediately assume fraud. Like we have professional skepticism. It's kind of similar to trusting management's word. These are complete opposites, but two extremes that we are not going to ever accept. We're not going to fully trust and we're not going to fully just assume fraud. Final answer here, most rational, most logical, pursuing an independent IT specialist. Awesome. Well, I was having a great time. I hope you were as well. Keep it up. Stay strong. Answer as many questions as you can. You got this. I believe in you. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.